What allows invested money to grow over time? This secret that we are going to discover today can really change your financial future for the better. Today we are uncovering the secrets that are going to build your long-term wealth. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at age 40. I'm here to help you do that even earlier and easier. So let's dive right in. All right, so what does allow invested money to grow over time? And maybe you can guess, but it's actually the eighth wonder of the world, which is compound interest. So what exactly is compound interest? Essentially, it is interest earning interest. So you invest money, let's say, into the stock market, and that money that you have invested is now going to start earning interest. And the interest that your money is earning is going to accumulate its own interest. So your money is able to grow exponentially over time because of compound interest. So let me share an example with you. All right, so in this calculator, we're going to say that we are saving $1,000 a month. And we're going to do that over a period of 10 years. And we're just going to say that we are saving this money under our mattress. So after 10 years, we're going to have $120,000. But if we put this in, let's just say a savings account earning 4% interest, then we can see the effects of compound interest. So instead of having $120,000, we now have $147,250. And if we were to put this money into the stock market instead of just putting it in a high yield savings account, then we could have the potential to earn 10% interest. So that is going to make our compound interest grow even more. So instead of that 140, whatever it was, thousand, we would have over 200,000. So we'd have $204,845. So you can see this green part in the graph, that is compound interest. So your money is in there, that blue part, that's what you've contributed, but this green part is interest earning interest. So compound interest. You can see the effects that it has if you're able to invest your money. Compound interest is really what is going to allow your invested money to grow over time. And speaking of time, this is a huge component to compound interest. So I want to show you another graph where we are going to compare two different scenarios. Because the longer amount of time that we have to invest, or that we are investing, the more our money is going to compound, the more it is going to grow. And that is without us adding extra money. All right, so going back to this graph, let's say that Susan is going to invest that $1,000 every single month, and she's going to do this from the age of 25 to 35. So she's doing it for 10 years. So we're going to leave it at that 10% rate of return. And we're going to have that balance of $204,845. And now let's say that Scott is going to invest his money, but he is going to start later in life. So for example, we're going to start with $0 for the initial amount, and he's going to invest that same $1,000 that Susan was investing. And he's going to get a 10% rate of return. And he is actually going to start 10 years later. So he's going to start at age 35. So he'll be investing from age 35 to age 65. So he'll be investing for a period of 30 years. So at the end of his 30 years, he is going to have $2,260,488. Going back to Susan, she has that $204,845 that she's invested from age 25 to 35. So we're going to change out the initial amounts and say 204 and 845. So we are going to say she's not going to invest anything extra, but she now has a period of 30 years, right? Because we're going from 35 to 65 now. So we'll change this to 30 years. So you can see just by Susan investing from age 25 to 35 and then not investing any more money, when she gets to age 65, she is going to have almost double of what Scott has. So she will have $4,063,592. So you can see the power of compound interest and the power of time that compound interest needs in order to continue to build on itself. So the more time you're able to give it, then the more it is going to grow. The longer the time we have to invest, then the more our money is going to grow for us. We really want to start investing as early as possible. And honestly, if you want help investing in the stock market, I have a free masterclass where I go over how I can help you invest in the stock market very simply. I will leave a link to the masterclass below in the description. You can click on that and check out the free masterclass. And then another part of growing our invested money is diversifying that money. We don't want to just have one investment and hope that it does well for us. For example, if we are only investing in the stock market, then we want to make sure that we have multiple investments inside of our stock market accounts. And we don't need to buy a whole bunch of different individual stocks or individual companies. We can actually invest in an index fund because index funds have a whole bunch of companies inside of just one fund. And if you want to know my favorite index fund, I have another video about that. I will leave a link above. You can check it out later on. But we want to make sure that we have diversification in our portfolio so that we aren't worried about losing all of our money if that one company that we're invested in goes bankrupt or goes out of business. We want to make sure that we have different investments inside of our investment accounts. And also another way to diversify is through real estate. That is what I have done. I've done the stock market and real estate together. So of course you can diversify your assets between different classes like the stock market and actual real estate properties. But if that is not something you're interested in, you can definitely just diversify within your stock market investing accounts. And then the fourth item I want to bring up about what is allowing your invested money to grow over time is actually patience and discipline. We want to make sure that we are patient with our investments and that we are disciplined in keeping up with our investing. We don't want to just invest once and then call it good. We want to make sure that we continue to invest our money over time so that it can compound exponentially. And we want to make sure that we are being patient. This is not a get rich quick overnight type of deal. We want to focus on the longer term and realize that our investments will go up and down over time, especially if they are in the stock market. But over the long term, they are going to continue to rise as long as we are choosing good investments. One way we can do this is by automating our investing. We can just set up an auto transfer and have our money automatically invested in the stock market. And that way we aren't even thinking about it and we don't have to keep that discipline. And also if we continue to automatically invest, we aren't tempted to not invest if the stock market doesn't look so great. We don't have to worry about that fear that we might have and think, oh, maybe I should try to time the market. Maybe now is not the best time to get in. We can have time in the market instead of trying to time the market. Comment below and tell me if you are taking advantage of compound interest. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and to the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.